I'm joined by Jim Paulsen, who's Chief Investment Strategist at the Leuthold Group, and Janelle Woodward is Head of Fixed Income at BMO Global Asset Management. It's great to see you both. Jim, let's talk about some of these levels. Is it a big deal to you that the S&P is back above the 200-day moving average for the first time since March 5th?
Well, for me, not so much. I'm more fundamental and technical, but I think it is important for the market as a whole, because I think there's a lot of technicians that certainly look at that as overhead resistance, and we've broken through that if we can close above it. I think it just adds, with everything else you've just mentioned, Kelly, to the level of optimism. Like I said, there's a lot of good things going on. This is the first time in this crisis that the news flow is predominantly good, and if you think ahead with reopening, it's likely to remain that way for a while, and that's something new in this crisis, really facing bad news the whole time. And the real issue is going to be at what point is whatever optimism is coming down the road, what point is that priced in? It's not going to be a straight line, but I think we've started a new bull market and a new economic recovery, and I'm not sure that it's going to peak out for good here. I think it's still got more upside. Yeah, and we'll come back to that. But Janelle, is obviously look at things more from the fixed income side. Do you get the same kind of, optimism from some of these market moves? Because if anything, people keep pointing to the level of bond yields, the 10-year, for example, and say, okay, we can be a little bit more hopeful about the shape of this rebound this year, but it's still suggesting a really tough slog in the years to come.
Yeah, we do see the optimism. I mean, we certainly see it today. We see credit spreads coming in, especially in those cyclical sectors, energy, materials, consumer discretionary. We see rates a little bit higher. So we do see that same theme. But overall, we would say that fixed income markets, credit markets in particular, have underperformed equities a little bit in here. And a lot of this comes back to market function and liquidity. And I think the other reason for optimism across fixed income markets is what the Fed has done and continues to do. There's a number of facilities that have been announced that are still being implemented. And so we think that there's going to be near-term support for a lot of segments of credit markets in particular as we look forward. Yeah.